This is Real Estate Talk Boston. Today we're going to be talking private money lending, otherwise known as hard money lending. We're joined by Bryan Joyce, EMCAP Lending. Bryan, why would somebody choose hard money lending? What's the benefits of doing a deal with you guys?
Sure. It's not really about the cost. I mean, hard money is short term. It's 6 to 12 months. Higher rate, higher fees, generally speaking. So it's not about the cost of it. It's about the speed of it. It's closing in a couple of weeks versus a couple of months probably. It's an easier process, less documentation, probably not an appraisal. Don't have to prove your income. Hard money lenders are looking at what's the property worth now, what's the property worth fixed up. And that's really what they're basing their decision on. Whereas a bank is going to dig into your financials, they're going to do an appraisal, things like that.
Yeah, it sounds like a completely different process.
Completely different, yeah.
And I want to be clear, hard money lending is used for investment properties only.
Yes, it's not for, say, a homeowner trying to get a loan on their own primary residence. Yeah, has to be an investor, owned in an LLC, S Corp, some sort of business entity.
Okay.
Yeah.
And you guys do a lot of stuff in the Boston area, and there's a lot of opportunity for multi-unit conversions and stuff like that. But you guys do a lot of stuff that's completely outside the box.
We do. We do a lot of multifamily condo conversions. We just approved a $3 million industrial building, or it was a 3-unit industrial building. Single-family fix and flips, ground-up construction. Anything real estate.
And you recently did like a motel, right?
Up in North Conway. A woman bought a motel, sort of mom and pop, rundown. Gave her the money to fix it up, put her own little spin on it, and she refinanced that with a bank in a year. Yeah.
So it's common for people to acquire a property with hard money, like you guys, and then 6 months, 12 months down the road, when the construction is done, you convert it over to a regular
traditional
loan.
Yeah. And they'll do it for a few reasons. One is traditionally a hard money lender usually has a lower down payment. We'll take a risk on the deal because of the terms that we have, and maybe we understand the real estate better. So we'll take, we can do lower down payments, so they're getting in for less money. And then banks typically don't like the renovation side of it. They would rather get the loan at the end when the property's stable. The tenants are in there. If it's a motel, maybe the motel is booked for the next 6 months. Banks will often send me deals or loans where they'll say, go to Bryan for the quick loan. I'll take it out at the other side, and the terms will be better than if you come to me now.
Right.
Yeah.
And you mentioned lower down payment. I know in investment properties, in the regular financing world, conventional world, they're usually looking for 25+% down up front. In your side, I'm not going to hold you to it, but typically, what do you see?
I mean, on average, the way we structure it is 12 to 15% of the total cost. So take your purchase price plus your renovations. That total will fund 85 to 88% of that cost. So it's generally a lower amount down. Some lenders will do just off of purchase price, which is fine. There are some lenders that get pretty risky on down payments, very low down payments. So I'd say we're a little more conservative there, but we feel like our terms and our fees are more competitive and make up for it. Yeah.
What's the best way, if somebody wants to reach out and connect and run a scenario by you, what's the best way to do so?
Easiest way is emcaplending.com, quick and easy, or phone 207-752-0107.
Thanks, Bryan. And if you'd like to connect with Bryan and his team, check out emcaplending.com. They can run through any hard money investment scenario with you. And remember, we have more of Bryan tips and other real estate tips right here on our page on boston.com.